Unleashing the Power of Compounding, Your Path to Financial Mastery. Hello, everyone. Welcome back to Royal Audiobooks, the go-to place for insights on personal finance and wealth-building strategies. Today, we're diving deep into a topic that has the potential to transform your financial future, the power of compounding. Definition of compounding. So, what exactly is compounding? In the financial world, compounding is the process where the value of an investment increases because the earnings on both an initial investment and the accumulated earnings from previous periods earn interest or returns. It's often referred to as the eighth wonder of the world, and for good reason. The magic of time. The true magic of compounding lies in the factor of time. The longer your money is invested, the more time it has to grow. Let's break it down with a simple example. Imagine you invest $1,000 with an annual return of 8%. In the first year, you'll earn $80. Now, instead of withdrawing that $80, you leave it invested. In the second year, your return isn't just 8% on your initial $1,000. It's 8% on $1,080. Over time, this compounding effect accelerates, creating a snowball effect that can lead to substantial wealth accumulation. Start early, reap big rewards. The key to maximizing the power of compounding is to start early. Time is your greatest ally when it comes to compounding. Even if you can't invest a large sum initially, the earlier you start, the more time your money has to work for you. Consistent, long-term investing can turn modest contributions into significant wealth over time. The Rule of 72. A handy rule to estimate how long it takes for an investment to double is the Rule of 72. Simply divide 72 by the annual rate of return, and you'll get the approximate number of years it takes for your investment to double. For instance, with an 8% annual return, it would take roughly 9 years for your investment to double. 72 divided by 8 is equal to 9. Compounding in different assets. It's important to note that compounding isn't limited to traditional investments like stocks and bonds. It applies to various assets, including real estate, businesses, and even your savings account. Diversifying your investments can enhance the compounding effect and reduce risk. Consistency is key. Consistency is a crucial factor in harnessing the power of compounding. Regularly contributing to your investments, reinvesting dividends, and staying committed to your financial goals will amplify the compounding effect. Exploring compound interest. Now, let's delve a bit deeper into one of the key elements of compounding, compound interest. Compound interest is the interest on a loan or deposit that's calculated based on both the initial principal and the accumulated interest from previous periods. In simple terms, it's interest earning interest, and it's a game changer when it comes to building wealth. The impact of compounding on debt. While we often talk about compounding in the context of investments, it's equally important to understand its impact on debt. Unfortunately, just as compounding can work in your favor when you're investing, it can work against you when you carry high-interest debt. This is why it's crucial to manage and eliminate high-interest debt as part of your overall financial strategy. Setting financial goals. Setting clear financial goals is a fundamental step in harnessing the power of compounding. Whether you're saving for a down payment on a house, planning for your children's education, or building a retirement nest egg, having specific, measurable goals will guide your investment strategy and help you stay on track. Reinvesting dividends. Another way to supercharge the compounding effect is by reinvesting dividends. When you receive dividends from your investments, consider reinvesting them rather than cashing out. By doing so, you're allowing those earnings to generate even more earnings over time, further amplifying the compounding snowball. Staying informed. The world of finance is dynamic, and staying informed about market trends, economic developments, and changes in investment strategies is crucial. Regularly review and adjust your investment portfolio as needed to ensure it aligns with your financial goals in the ever-changing landscape. In conclusion, the power of compounding is a force that, when harnessed wisely, can lead to financial freedom and security. Start early, stay consistent, and make informed decisions to make the most of this powerful financial tool. If you have any questions or topics you'd like us to cover in future videos, drop them in the comments below. Thank you for joining us today on your YouTube channel name. Don't forget to like, subscribe, and share this video with anyone who might find it valuable. Until next time, happy compounding. We hope you found today's discussion on the power of compounding both informative and inspiring. Now, it's your turn to take action. Assess your financial goals, review your investment strategy, and identify opportunities to leverage the magic of compounding. If you have any personal stories or experiences related to compounding, We'd love to hear about them in the comments below. Your insights could inspire others in our growing community of financially savvy individuals. In our next video, we'll be tackling another crucial aspect of personal finance, so stay tuned. Whether you're a seasoned investor or just starting your financial journey, Royal Audiobooks is here to provide you with the knowledge and tools you need to achieve your financial aspirations. As we wrap up, remember that the power of compounding is a force that can work wonders for your financial well-being. Whether you're just starting your investment journey or looking to optimize your existing portfolio, understanding and leveraging the magic of compounding can make a world of difference. If you found this information helpful, don't forget to like this video, subscribe to our channel, and hit the notification bell for more valuable insights. Until next time, happy investing.